What is going on, investors? Back again. Time to take a look at another company. Today, we're going to take a look at Rocket Companies, better known as Rocket Mortgage, ticker symbol RKT. This company just went public, as I'm sure most of you know, but it's a company that's been around a long time. You probably are aware of them, maybe even seen some of their commercials. So I'm going to jump into the S1 filing that they filed a few weeks ago. There's just 2 or 3 things in here that I actually think are kind of interesting that I think I'll point out to you. Then finally, we'll jump into the most recent numbers. They actually pre-released their most recent quarter. They're going to have a conference call here in a few weeks where they talk more in depth, but they gave all the critical information, including total revenue and net income. So I find that kind of interesting. We'll jump into the S1. I just want to show you really quickly kind of the revenue trends that this company has been doing over the last few years. I love these S1s because we can see revenue all the way back to 2015. This is a company, again, like I said, has been around a while. A little bit more on the S1, and then finally, I'll compare it to some of its peers. It's hard to find like a company that's public that is just doing mortgage originations like Rocket Mortgage is, but I will have a couple companies here that we can compare it to. And then finally, we'll jump into the stock chart. I actually think this is going to be one of the most exciting things because there's a really interesting potential setup in this stock. And I think that you'll want to stick around and see how you could either potentially trade this or pick a point to if you want to go long, maybe you want to short this stock. I think I have some information that might help you in that. So let's jump into S1. So the interesting thing that I found with Rocket Mortgage that I didn't know off the top of my head, it says up here of our total originations, these are mortgage originations in 2019, 39 billion or 27% were to clients purchasing a home. So when you think of Rocket Mortgage, you might think, well, it's all about the person that's trying to buy a home. This shows us right here that only 27% of their business is actually clients looking to purchase a home. They are actually big on the refinance industry. In fact, most of their business actually comes from refinancing, as we see here. Historically, our originations have been more heavily refinancing than the overall origination market. And accordingly, if interest rates rise and the market shifts to purchase originations, our market share could be adversely affected if we are unable to increase our share of purchase origination. So Rocket Mortgage actually has kind of a big market in terms of the refinance market. They are far less competitive when it's purchase originations. Now you might think, well, what can affect people refinancing? Well, certainly they mentioned it here. Interest rates. Interest rates are historically low. We're in a good market to refinance your home. But what could also adversely impact the refinance market is equity in homes going down. So home prices falling, or if anything, just home price kind of flattening out or barely moving. And a lot of places like CoreLogic and Redfin and Zillow are all predicting that in many of the major markets. In fact, CoreLogic has many markets going down 6, 10, maybe upwards of 20% next year. So we'll see if that ends up happening. It's something to keep in mind with Rocket Mortgage because interest rates, while they are low now, obviously they might not stay there, or maybe people will decide to not refinance as the value of homes start to drop. So let's move into the most recent numbers, and then we'll take a look at the historical numbers really quickly as well. So these numbers are hot off the press. They just released these not too long ago. And so we see here mortgage origination value up here. This is kind of a top line numbers. This is the value that they're originating. I think you can kind of take away a little something from this. And you can see they're growing 3 months over 3 months really quickly and 6 months over 6 months. I mean, this company is doubling. I think it shows you the hotness that is in the refi market right now. So tons of people are refinancing. There's record low rates. People have equity in their homes. How long that lasts, I think, is up for you to decide. Now, for 3 months ended down here, we get a little bit more in depth here. So we get their actual total revenue here and look, it went up big time. So they have total revenue of $5 billion in the quarter. That's a huge quarter for them because, as you can see, for 6 months here, we have $6.4 billion in revenue. So it's an absolute monster quarter for them. Net income was up to $5 billion. That compares extraordinarily favorably to the previous period, where we lost $54 million. And you see here, this $3.5 billion is almost all the net income that they made for the last 6 months. So they had a great quarter. And I actually anticipate the refi market to probably stay hot through the rest of the year. I don't see any reason why people will stop refining unless there's just some major market correction or something, which I don't anticipate in the near term. In the longer term, that is certainly possible. Now, let's take a look more broadly here. So we've got year ended here, and then we've got the 3-month here. I kind of want to just take a look at like the year over year view of their revenue. So we went from 3.1 billion in 2015. We ticked up a little bit in 2016 to 3.8. 17, we actually saw a drop where we went down to 3.3 billion, and then we dropped again in 2018 down to 2.9. But look at this. Then we exploded in 2019. Man, this company really just turned it on. They increased their revenue by like $2 billion in 1 year. That is like almost a doubling what they did the previous year. In fact, it is pretty much a double. So wow, they really impressive. And it looks like they're carrying that forward because for 3 months ended, they had $1.8 billion. And that is just for a quarter. So if you want to annualize that out, you're over this $4.9 billion mark. You're actually closer to like a like a $5 or $6 billion mark. So that is extraordinarily impressive. Now let's take a look at the bottom line numbers, because here's our net income down here. That's also something that you want to keep in mind. So we made $1.2 billion in 2015. It actually went up in 2016 to $1.8 billion. 2017, we went down when we saw our revenues decline a little bit, down to $770 million. 2018, when we saw revenues decline again, went down to $612 million. But then boom, we had one of our best years, maybe the best year ever for Rocket Mortgage. In 2019, we made $892 million. And you see in the most recent quarter, they made $97 million. Now that annualizes out. You can give them credit for maybe $100 million. So we can give them credit for about $400 million in net income. So from a net income perspective, if this quarter repeats itself 4 more times for the rest of the year, well, they actually will have their lowest net income in the last, on record here since 2015. And so that's not necessarily a good sign. So while we see the top line growing, we are seeing that the bottom line is improving in 2019. It's certainly improved, but it wasn't as good as it was in 2016 and wasn't as good as it was in 2015. Obviously, they're gaining market share. They're probably spending a little bit more on these salaries, obviously, and some other things, but we are declining on the net income side in relation to how quickly we're growing that kind of top line, this total revenue line as well. So that is something that you want to keep in mind. Now, from a balance sheet perspective, everything looks good. Again, they just went public. We don't have the most recent balance sheet, but we have to assume they're pretty well capitalized. They do have a little bit of liabilities. So we have total liabilities here, but we do have some debt here on the balance sheet. I wouldn't really worry too much about this debt. It's not a lot of money, and they do have quite a bit of cash. And this is, if you're not sure how Rocket Mortgage works, they basically originate a loan and they sell it within usually 2 or 3 weeks to another, either the government or, another major bank or investors or things like that. So they really just look to originate these loans, make some fees, and then they sell the loan. So they don't necessarily need tons and tons of cash. While they do have these mortgage loans held for sale, these are, in limbo essentially, where they have them on their books and they're looking to sell them. So they do have some carry risk with these mortgages, but you'd have to assume that, the vast majority of these would have to go bad. And if that happened, probably the entire United States or even the entire world is doing really, really bad. So I wouldn't really worry too much about that risk. But again, what I wanted to point out again in the beginning is they are tied to the refinance business, which is a little bit different and is a little bit more risky since they aren't as diversified diversified as some of their competitors. Now, their top competitors in terms of mortgage originations is Wells Fargo, Bank of America, JP Morgan. There's also PennyMac Mortgage. I just threw them in here just as they're a much smaller company, much different company. They do hold the mortgages as well, but I wanted to throw them in there. And then finally, I wanted to throw LendingTree in here because Rocket Mortgage is starting to get into auto loans and personal loans and things like that. And so LendingTree could be kind of a comparison as well. Now, from a price to earnings gap basis forward, we're looking at a 13 PE on Rocket Mortgage. That actually compares really favorable to like a Bank of America and even a JP Morgan. Again, JP Morgan and Bank of America are a little bit more diversified. They have quite a few more businesses going on than Rocket Mortgage, but it gives you an idea that, yes, this company just IPO'd, but their price to earnings ratio isn't completely out of whack when you compare it to its major competitors. Now, Wells Fargo's a little out of whack right now. They've obviously fallen on some hard times. They're doing some cost cuttings and things like that. And so their PE ratio is probably in a more normal time, probably closer to where Bank of America or maybe JP Morgan's at. But at a 13 PE, that is not terrible. So now moving over to the stock chart, I think this is the most exciting thing. So this stock came public. It popped up like a lot of stocks do. In fact, it gapped up. And what's interesting is we made this big kind of valley here. And what I've noticed just over the last couple weeks here, this is actually a 60-minute chart, because if I did it on a daily chart, it wouldn't make a whole lot of sense. So just keep that in mind when we're looking at this chart. This is actually a 60-minute chart. But I noticed we're gapping, trading sideways, gapping, trading sideways, gapping, trading sideways. So if you want to think that the past is history, we probably are going to gap and trade sideways. But the other thing I see here is a potential kind of cup and handle that we actually have made kind of a cup, and we kind of gapped up and we're trying to make a little handle over here. So we'll see. That is typically a pretty nice trend to get involved in. We do see the MACD rolling over just a little bit. Again, we don't have a lot of volume, a lot of trading data on this stock. I think for me, if I'm going to pick levels, I marked out this one, the $24, $25 level. To me, looks like an okay one because it's where we peaked here. We had some resistance here. We had some resistance here. The stock got rejected here. It didn't hang out here at this $25 mark for long, and then it was off to the upside. So I actually like this stock. I think if you think that the refinance trend is going to continue for the next 12 months, I actually see this stock probably trading higher. If you think that home prices are going to pretty rapidly decline, as some people are going to predict over the next 12 months, that's going to impact the refi market no matter what happens to interest rates, because banks and lenders and originators, they're going to have trouble refining when that asset value is declining in value. So those are the risks you have to take here. So if you want to be more longer term on Rocket Mortgage and you want to wait for a better entry point, I don't blame you. I would actually wait to see what plays out with the interest rates, with home prices, with the refi market. And then as that data starts to turn negative, well, then you probably will have a better chance to jump in at Rocket Mortgage. Obviously, it'll be a little bit different time frame and a little bit different scenario that you'll be investing in the company. Things might not be going as well, but things look really good from a revenue perspective on this company. This company has really done a nice job, churning out this net income and this net revenue right here and making it look really impressive on the comp basis. So investors are really going to like that. They're going to like that kind of growth, but in the same sentence, they're going to expect this type of growth. Okay. If you're growing revenue and net income this quickly, then you better keep doing it quarter over quarter, or yes, this stock will probably break down a little bit. So for me, I'd actually wait for a pullback back into this $25 range, but I don't blame you if you see a cup and handle set up here and you see this gap trading up, and you want to get on the momentum. I actually don't blame you at all. Now, I do believe, again, that shares are probably relatively fairly valued when you compare them to competitors like Bank of America and JP Morgan. they actually are pretty right in line with being fair valued. So that's my take on Rocket Mortgage. This is a good one. So I want to thank everybody that suggested me to take a look at this one. I sure wish I would have gotten it back up in these lows. This $19-$20 range, I think you're sitting really pretty. If we ever see a pullback into that range, I think this one's absolutely would be a buy back down in these $20 range. So if you grab this stock somewhere down in here, pat yourself on the back. You did a really nice job, in my opinion. So there we go. That's Rocket Mortgage. Hopefully you guys enjoyed this one. We'll be back again soon with another video. Good luck with your investments.